to Zylostar. Today, new opportunity and new market updates. Today with me, Mr. Amijan and Mr. Summer.
The past week have been very interesting as people finally stopped rushing buying gold and we can see some strength in the USD. Where is that going to take us?
Hope you are doing well. As you know, last week we got some economic indicators such as PPI and CPI in the United States and also some speeches from the FOMC members, and on the other hand we got some earnings from the corporates in US. Let's review it.
Alright everyone, so here we are kicking into our technical outlook over the markets for the upcoming week. So let's start off with the dollar index. So as we can see, the dollar index has actually did a pretty impressive movement to the upside after forming this bull flag, which was very interesting. And from here we can see a small consolidation, which also reflects weakening in upper momentum. So from here we can expect the dollar to come down, retrace into this support level at 102.5, which as we can see, it's a very solid level. And from here, probability is that DXY will continue its up momentum, retesting this resistance and probably filling this fair value gap with a breakout. So this is about dollar index. We can see this movement happening after a lot of many Fed members speaking of that the US economy is actually doing pretty well and their expectations to inflation is to hit 2% and etc. etc. So people are more positive about the dollar, and also due to the interest rate, we can see this positivity also reflecting in indices and some stocks. So from here, we go to NASDAQ. As we can see, NASDAQ actually it's just being bought up so much. We can see it's at a very solid resistance. From here, expectations are, actually there are two scenarios, or few scenarios in this case. We are pretty much very bullish on NASDAQ on a longer run, and that's due to people's expectations about the interest rate. But technically, scenario number one, we already had a break and retest. So we might see the price retracing to this minor support here before continuing its up movement. Scenario number two is we get an ascending triangle. Actually, it's forming here as we can see, right? And from here we get this breakout. And scenario number three is that NASDAQ retraces back to this solid support, which might happen, and that will keep NASDAQ consolidating in this narrow zone. This is about NASDAQ. Going to Bitcoin. Bitcoin is pretty nice. Now, technically, when we saw this retracement and this place here shaped for us a head and shoulders, as we can see, here's the shoulders, the head, the other shoulder. And from here, we could clearly see that the market has to break below this support level of 60,000 to grab liquidity. And after that could possibly be a very, very good buy. And this is exactly what happened. Market went up to fill this fair value gap and then broke below, respecting pretty much or perfectly respecting the pattern, reaching to a solid support at 59,000, as we can see here. A very solid level. And from here, a good entry would be after this candle here. So our perfect entry would be about 59,700 for a buy position. Now, we saw a very, very strong bullish momentum because many aspects of technical analysis and also fundamental analysis reflecting bullish view on Bitcoin. So from there, a lot of people were expected to buy, and this is what caused us this very, very impulsive movement to the upside. Now, from here, we're having a bullish pennant forming, and yes, we are very bullish on Bitcoin. There is a possibility of it to retrace to this level just to close the gap in here, 61.500, and continue up, but most likely it's just gonna continue up, retesting this resistance and probably break it, but that might take some time because we're actually now at a very tight situation when it comes to expectations, whether the Feds are going to cut the interest rate by November or not. And also the US election plays in a very big role. However, we're bullish on it. So as a trade, be cautious what you're doing. As an investment, it's not necessarily a bad idea to buy Bitcoin. Matter of fact, it is looking a very good time. So that's about Bitcoin. Let's go into gold, which is something I'm not doing most of the time, but why not to do something as a change? So as expected, yes, the levels of 2,600, a solid support. Yeah, it fell to 2,605 actually, not 2,600 precisely. Why? Because of speculations. You should always understand how prices fluctuate, especially in certain assets like gold, where bullish momentum is way stronger than bearish in no matter time you're talking about. So we can see that gold is moving very smoothly in its uptrend or ascending channel, or up channel, whatever it is as it's written here. So from here, we can expect gold to keep consolidating and retesting this trend line, because actually the past week gold fell down pretty well, and that was because a lot of people are feeling comfortable, or not say comfortable, let's say confident about the economy and what's happening around within USA. That's why they're selling gold, investing in other assets, and so on and so on. Even though geopolitical tensions has eased a little bit, actually, not seized, and speaking about some truce between certain parties and all of that has made people a little bit more concerned about investments, that rather than just buy gold and hope for the best. Yeah, so we can expect gold to retest this trend line now, 2628. So from here, actually, if 17th of October. So that will give us time before the next interest rate cut. And if that happens, there is a possibility for the price to break below it and retest this support at 590s or something, right? So, however, this is not very likely to happen because still everybody is predicting this interest rate cut to come. So nobody really wants to sell gold as much, but that is a small possibility. So most likely retest the trend line and continue its uptrend, going to its new highest price in history. Yeah, going to our EURUSD. Now, after a negative interest rate on euro, we could see EURUSD falling, and also strength. It wasn't actually negative, it was as expected, but it was less than the previous. So still impacted euro negatively, and the strength that we have been witnessing from the dollar has caused EURUSD to fall so much. Now from here, it's at a very solid support, so technically it should make some retracement before it continues its down movement. And if a possibility are this breaks going to this support and this fair value gap. Right, so that's what we are looking on EURUSD. As been stated, it's at a crucial support level. So that will be it for our technical outlook on these assets.
Hello everyone, my name is Masood Hamidi, and once again we are here at Zylostar to review the last week and also have a look for the upcoming week. I want to start it with the fundamental. As you know, fundamental is one of the most important factors in financial markets. Let's dive into the topic. First, with economic indicators. Last week we got some news regarding to the cash rate, or better to say interest rate in New Zealand. The Reserve Bank of New Zealand cut the interest rate by 0.5% as expected, or better to say as we expected, and Central Bank of New Zealand stated that New Zealand's economy currently has more than the capacity. Low import prices have helped to reduce the inflation. Annual consumer price inflation is within the target range of 1 to 3%. And also from the United States, we got the FOMC meeting minutes, as you can see here, that they mentioned that the economy is still in good shape and healthy, and there is no big worries for the recession. And also they mentioned that labor market is not the source of inflation. Also, we got CPI numbers on the 10th of October, which was already Thursday. And in CPI, we got a little bit higher than expected, or better to say than we expected already. And it published 2.4%. And on monthly biases, it increased 0.3%. But do not forget, 70% of the inflation was because of the shelter index, which already rose 0.2% in September. And also for food index, it increased 0.4%. So it means that 75% of the monthly all item increased because of these two categories. As you can see here, the inflation, we can say approximately is decreasing month by month, and it's in the path of the Federal Reserve purpose and goal. But do not forget, this increase, as I said, was only, maybe we can call it only a noise. Also at the same day, which was already 10th of October, we got the unemployment claims, or better to say initial jobless claims, which published 258,000, which was higher than expected, which was 231 for the forecast. And it means that the initial jobless claims increased a little bit for the last week. Eventually, on Friday, 11th of October, we got a GDP number from the UK, and also employment change, which published more than expected, and also unemployment rate, which published lower than expected for Canadian dollar, and it raised the probability of rate cut, or better to say, it decreased the probability of rate cut by the Bank of Canada. And also, same day on Friday, we got the PPI numbers for the United States. It published as expected. It increased on monthly biases 0%, which was lower than expected. And also for the core PPI, it increased exactly as predicted, which was 0.2%. From the geopolitical side, we still have conflicts in Middle East, and it's still in the highest level, which we faced already since the beginning of the year. From the corporate earnings, we got some good earnings regarding to JP Morgan, Wells Fargo. As you can see here, JP Morgan Chase third quarter net interest income beats estimates. And about Wells Fargo, as you can see here, Wells Fargo profit beats forecast as provisions shrink, shares rise. And also about the BlackRock third quarter report, it was more than the market estimates, and all together from the earnings side, it helped the financial markets, or better to say US stocks, to move higher. From the China, investors still believe that stimulate packages are very good for the future of the economy, and market, or better to say stock market in the China, rose significantly in the last week. Let's crunch the topic more with the upcoming week. I want to start it again as usual with the economic indicators. On the 15th of October, we are going to have the climate count change for the UK at 10 a.m. to Dubai time. As you know, our head office is located in Dubai. And same day at 4:30 p.m. we are gonna have the CPI number for the Canadian dollar. Next day, which is Wednesday on the 16th of October, we are gonna have the CPI for the New Zealand and UK, or Great British Pound, at the same day, which is one of them is 1:45 a.m. and the second one is 10 a.m. And next day, which is Thursday on 17th of October, we are gonna have the employment change and unemployment rate in the Australian dollar. At 4:15 p.m. to Dubai time, we are gonna have the main refinance rate and monetary policy statement from the European Central Bank. And on the same day, we are going to have one of the most vital, or better to say crucial, economic indicator, which is showing the power of the consumers. We call it retail sales for the United States. And later we are going to have the ECB press conference from Christine Lagarde at 4:45 p.m. to Dubai time. And eventually on Friday, we are going to have the retail sales number from the UK at 10 a.m. From the corporate earnings, we are going to have a crowded week because, as you may recognize, the season of the earnings started again. On Tuesday, we are going to have the United Health Group, before market, Citibank, Bank of America, Johnson & Johnson, and Goldman Sachs, and other joint companies such as ASML or TSMC and Netflix on Thursday, and Travelers and other joint companies such as Kinder Morgan, Aluka, and Morgan Stanley. So do not forget, pay attention to the earnings of the companies, because it may change the sentiment of the investors for the soft landing, and it can increase the probability of soft landing or hard landing. Do not forget, if you want to increase your win rate, or better to say the success rate in the financial market, always mix fundamental and technical together. The result would be amazing.
Thank you for watching.
Don't forget to like, share, and subscribe for more updates.